Okay, so let's start. We want to continue from where we left. So let's start this new topic. And the topic is called manufacturing account. That's the topic we want to start. So let me introduce it. Good. Now, as a manufacturer, we want to look at which accounts do you prepare. As a manufacturer, what accounts do you normally prepare by end of every year? Okay. But before we look at the accounts that a manufacturer would normally prepare, we need to know what are the cost elements that a manufacturer would normally incur. So that's what we want to start with. Cost elements in manufacturing. That's what we want to talk about. What are the cost elements? Don't write them down. I'll dictate the notes. Don't write them down. I'll give you the notes. Now listen. As a manufacturer, there are some costs that you are likely to incur in the cost of whatever you are manufacturing, in the process of whatever you are manufacturing. And one of the costs that you would incur is what we call direct material cost. That's one of the costs you will incur in the manufacture of whatever you're manufacturing. Number two is what we call direct labor cost. That's another cost you will incur. Number three, another cost you will incur is what we call direct expenses. That's another cost you will incur in the manufacture of whatever you're manufacturing. Number four, another cost you will incur is what we call factory overheads. This is factory overheads. Another cost as a manufacturer you will incur is what we call administration expenses. Another expense or another cost you might incur is what we call selling and distribution expenses. So these are costs that you as a manufacturer you would incur in the process of manufacturing whatever you are manufacturing. So I want to go through each of them. What it is or what they are and how we shall use them later. But first we need to know what are they. What is a direct material cost? This is a cost, a direct material cost. Don't write. A direct material cost is that, or we can even start by saying direct materials are those materials that are used directly in the manufacture of a product. Any materials that are used directly in the manufacture of a product, that kind of material, we classify it as a direct material. Okay? That material that is used directly in the manufacture of a product. We normally also say it is that material that can be identified. Any materials that can be identified in the final product. You can identify that material from the final product, you can identify it. That kind of material is what we classify as a direct material. For example, if you are manufacturing tables, what are some of the examples of direct materials? The materials you need directly in the manufacture of tables. Obvious, you need timber. That's one of them. You need timber. That's a material you can identify in the final product. You need nails. You need glue. these are materials that you can identify in the final product. Those are materials you can identify in the final product, and therefore we refer to them as direct materials. Okay, so the cost of these materials is what we normally refer to as direct material cost, as direct material cost. Good. So that's all we can say about direct materials. They are those materials that are used directly in the manufacture of a product. Direct materials are those materials that are used directly in the manufacture of a product. Next, we go to what we are calling direct labor, or what we can call direct wages. We also call it direct labor stroke direct wages. Some books will call them direct wages, some books will call it direct labor. Now, these are wages that are normally paid, to the workers who are directly involved. The wages you pay to the workers who are directly involved in the manufacture of whatever you're manufacturing, their wages is what we refer to as direct wages or direct labor. For example, in your manufacture of tables, you need somebody who will cut the timber or saw the timber, cut it into pieces, join the pieces of timber into tables. The wages you pay such a worker who will saw the timber, shape it, join the pieces into the tables, then we are saying that kind of wage is what we refer to as a direct labor or direct wages. The wages you pay to the workers who are directly involved in the manufacture of whatever you are manufacturing. Good. That's all we can say about direct labor, or what we call direct wages. Good. What about direct expenses? What are these kind of expenses? These are expenses that must be incurred. These are expenses that must be incurred in the manufacture of whatever you're manufacturing. Let me give an example. Suppose, as a manufacturer, you need to manufacture a product called X. You need to manufacture a product called X. But for you to manufacture this product, you need what we call a special equipment. You need a special equipment which on your own as a manufacturer you don't have. For you to manufacture this product called X, you need a special equipment which you don't have. So what can I do for me to manufacture this product X? The only way I can manufacture it is for me as a manufacturer to go and hire that special equipment. In the process of hiring that special equipment, I will incur what we call hire charges. I will have to spend money on hire charges. So it is obvious, therefore, that if you don't get this special equipment, you can't manufacture that product called X. And therefore, for you to manufacture that product called X, you need this special equipment. Therefore, for you to get this special equipment, you need to pay what we are calling hire charges. So, hire charges now becomes an example of an expense that must be incurred in order to manufacture this product called X. Another one. Suppose you want to manufacture this product called X. Listen, you want to manufacture that product called X. But for you to manufacture it, you now realize somebody somewhere owns the patent right. He owns the patent right over that asset. You as a manufacturer, you want to manufacture this product called X, but you now realize somebody somewhere owns the patent right over these products. So how can I manufacture this product? The only way you can manufacture this product, you as a manufacturer, is to go to the owner of the patent rights. go to the owner who owns that patent right of that product and agree with him that maybe for every product you'll be manufacturing, you'll be paying him a certain amount. If you don't pay him that amount, then you cannot manufacture that product. You cannot manufacture that product. So you will be required to pay what we call royalties. These are amounts paid to the owner of a patent right for using his ownership right, right. So you agree on an amount of royalties, how much you'll be paying per piece or per whatever of the item that you will be manufacturing, okay? That's what we are trying to say. Good. So that's what we are calling another example of direct expense. So we are saying it's that the kind of an expense that must be incurred, to manufacture whatever you are manufacturing, Good. So we are giving an example of hire charges for hiring a special equipment and royalties that are paid to the owners of the patent right, Good. So that's all about that. We now go to factory overheads. What are factory overheads? These are, let me explain, what are factory overheads? These are other expenses, any other expense found within the factory, any other costs incurred within the factory, but not a direct material cost, not a direct labor cost, and not a direct expense. Any other costs found within the factory, but not a direct material cost. Listen, this is your factory. It's true, you spent material cost within the factory. But now we are saying again, direct labor. These are workers who are involved directly in the manufacture of whatever you're manufacturing. Their wages. It's obvious it's a cost within the factory. Okay? But we are now going on to say factory overheads are any other expenses found within the factory, but not a material cost, direct material cost, not labor cost, and not a direct expense, Good. Let's for example, the rent of the factory rent, factory insurance, whatever it is, maybe factory electricity. These are some of the expenses you incur within the factory, We shall come across many others in a short while. And we are saying any other cost incurred within the factory, but not a direct material cost, not a direct labor, not a direct expense, That's what we are saying. Now, we are giving an example like factory rent, factory insurance, factory electricity. Now, we have already talked about, what are direct materials. These are materials we said that are used directly in the manufacture of a product. That means they're incurred within the factory. What is a direct labor? Those costs of labor that are paid to the workers who are directly involved. Good. That is it about factory overheads. We have said what are they? Any other cost incurred within the factory but not a direct material cost, not a direct labor cost, and not a direct expense. Are you there? Good. Now we move on to the next one, and the next one is what we are calling administration expenses. Administration expenses, what are they? Administration expenses are those expenses which are of administration in nature. Any expense that is of administration, not manufacturing, but of administration in nature, that kind of an expense is classified as an administration expense. For example, the salary you pay to the general manager, that general manager is only there for administration purposes, not for manufacturing. Of course, the salary you pay to the production manager, that falls under factory overhead. The salaries you pay to the factory workers, those are factory overheads. We shall talk about that in a short while. But I'm giving an example. The salary you pay to the general manager, that means it's classified as an administration expenses. Any office rent, for example, remember you use office for administration. So any office rent, that also becomes an administration expense. We also are referring to office electricity. These are other examples of administration expense. We use the office for administration. So if you are paying office electricity, then of course, if you are depreciating office equipment again, that becomes that becomes an administration expense. Listen, but if you are depreciating factory machinery, that becomes a factory overhead. Good. So that's all about admin expense. Now let me mention what is selling and distribution. Of course, selling and distribution expenses are those expenses. Selling and distribution expenses are those expenses which are incurred in the process of selling and distributing. Any cost incurred in the process of selling and distributing the goods that you have manufactured, that kind of a cost is classified as a selling and distribution. Any cost incurred in the process of selling or distributing the goods that you have manufactured, that kind of a cost is classified as selling and distribution. For example, we can say advertising. When you pay for advertising, you are paying so that you promote the sales of the goods that you are manufacturing. Another one could be the salesman's salary. The salesman's salary, we pay them salary to distribute the goods manufactured. That's another selling and distribution expenses. Others would include things like bad debts. Of course, you know bad debts come because of selling and distributing the goods. When you sell, you may suffer a bad debt. Those are examples of selling and distribution expenses. We have given examples like advertising. We can also say provision for bad debts, bad debt themselves, salaries, salesman's salary, and many others that we shall be coming across, Good. So those are the costs that a manufacturer would normally incur. I want to go further now and look at, before we put down the notes, I want to go further and look at what are the final accounts that a manufacturer would normally keep. Final accounts of a manufacturer. One of the accounts of the manufacturer is what we shall be calling a manufacturing account. One of the accounts that a manufacturer would have to keep is an account called manufacturing account. The second one is what we call the normal income statement or a statement of profit and loss. That's what you can also call it. And of course, the statement of financial position, that is the balance sheet. Good. So I want to talk about how to prepare each of these and what is the purpose of preparing them. What is the purpose of preparing these accounts? So let me start by looking at how to prepare what we are calling manufacturing account. Manufacturing account. But before we look at how to prepare it, listen, what is the purpose of preparing a manufacturing account? Listen. As a manufacturer, you may want to know how much it costed you to manufacture whatever you're manufacturing. How much does it cost you to manufacture whatever it is that you manufactured? So to determine how much it will cost you or it costed you to manufacture whatever you are manufacturing, you are required to prepare what we are calling a manufacturing account. You prepare what we are calling a manufacturing account. That's what I want to talk about now. How do we prepare that manufacturing account? How do we prepare that manufacturing account? Good. So we have said the purpose of the manufacturing account is to determine what we call cost of production. Cost of production. To determine the cost of production. Now, to get the cost of production of whatever you're manufacturing, you are supposed to take what we are calling material cost. Take what it costed you for materials, add what it costed you for the labor cost. Okay, listen. Add how much it costed you for direct expenses. All of them, add all the expenses. Then you add what we call other factory overheads. Other factory overheads. Good. Whatever you get now, that will become the production cost. Take how much it costed you as a manufacturer for the materials, add how much it costed you for labor, how much it costed you for the direct expenses. We have given examples like royalties and higher charges. Then you add any other factory expense. Add any other factory expense. Good. Now, the material cost we are talking about here, before I talk about that, there are normally two types of material cost. There are normally two types of material cost. There are two types of material cost. There is what we call the direct material cost. Direct material cost. And there is what we call the indirect material cost. Indirect materials. What's the difference? Direct material and indirect material. Now, direct materials, we have already talked about, are those materials that are used directly, in the manufacture of a product. We have given an example, like if you are manufacturing tables, you need timber, you need the nails, and you need the glue. Those are materials that are used directly in the manufacture of a product. I told you these are materials that can be identified in the final product. Good. What about indirect materials? What are indirect materials? These are materials you need, listen, in the manufacture of whatever you're manufacturing them, but they cannot be identified. In the final product. You can't see them in the final product, yet you need these materials in the manufacture of whatever you are manufacturing, in the manufacture of whatever you're manufacturing. Take, for example, You are manufacturing tables. You need a hammer. You need a saw to cut the timber. These are materials you need, but they cannot be identified in the final product. They cannot be identified in the final product, yet you need them. I've given an example, like you need a hammer, you need maybe a chisel, you need maybe a saw to cut the timber. These are materials you need, but they cannot be identified in the final product. So the cost of such materials, listen, the cost of such materials is what we call indirect material cost. Indirect material cost. So we have two types of material cost. We have the direct material cost and we have the indirect material cost, and we have the indirect material cost. Good. We also talk about labor. Again, there are two types of labor cost. There is what we call direct labor cost, direct labor, and there is also what we call indirect labor. Indirect labor. Now listen. We have already discussed what we call direct labor. I told you direct labor is that labor cost or the wages you pay to the workers who are directly involved in the manufacture of whatever you are manufacturing. Any cost or wages you pay to the workers who are directly involved in the manufacture of whatever you're manufacturing, that kind of labor is what we call the direct wages or direct labor. I told you, if you are manufacturing tables, the wages you pay to the workers who will cut the timber, shape it into the right shape and put it into a table, the wages you pay such a worker is what we classify as direct labor. Now, again, you are manufacturing tables in your factory. You need somebody who will sweep the factory. But that person does not manufacture tables, but you need the services of such a cleaner. He's found within the factory. He cleans the factory, but he does not manufacture the tables. The wages you pay such a worker who is not directly involved in the manufacture of whatever you're manufacturing, such wages or such costs, we classify them as indirect labor. We classify them as indirect labor. Good. So now you know what's a material cost. We have said there are two types of material costs. There is direct material cost and indirect labor cost. Indirect material cost. Labor cost, we have said again, there is direct labor cost and the indirect labor cost. Then I've told you there is also direct expenses and factory overheads. Now listen carefully now as I'm developing. To get the cost, of production, we normally take what we call the cost of direct materials. You add the cost of direct labor. You add what we call direct expenses. Listen, I have taken the cost of direct material. How much is the cost of direct labor? How much is the cost of direct expenses? When you add those three, that gives you what we call the prime cost. You get what we call the prime cost. Then you normally add to that prime cost, you normally now add other factory overheads. Let me use that in short, factory overheads. Listen, I've said to get the production cost, take the cost of direct materials, take the cost of direct labor, take the cost of direct expenses, get what we call prime cost. Then you add all the other factory expenses. Now, when we talk about cost of direct materials, in principle we are saying get what we call cost of direct materials are the raw materials, of course. Listen, direct materials are the raw materials. So we normally say you take what you call cost of raw materials consumed. Cost of raw materials consumed. How much did you consume of the direct materials or the raw materials? That's what you add, you take. Then you add the direct labor cost, add direct expenses, get what we are calling the prime cost. Get what we are calling the prime cost. Once you get the prime cost, then you now add to that what we are calling the factory overheads. Now listen. So where shall we be classifying? I want you to listen carefully now. Where shall we be classifying the indirect materials? Because I've told you this first one is the cost of direct material, which is the same as cost of raw materials consumed. Then I said you add direct labor, add direct expenses. So where therefore shall you classify other materials, like we are calling them indirect materials? Listen, I told you these are materials you need, but they cannot be identified in the final product. You need them in the manufacture of whatever you're manufacturing. I've given you an example of the hammer, the chisel, the saw that you need. Listen, so any other material that is not a direct material, listen, we shall be classifying it as part of the factory overheads. That indirect material, we shall be classifying it as part of the factory overheads. Because in this topic, listen, in this topic, the examiner will give you items or expenses, but he will not classify them for you. Normally, it's your responsibility to classify them. So if you are given an indirect materials, we shall be classifying it as a factory overhead, because it's a cost incurred within the factory. The same thing again where we discussed about indirect labor. You need the services of the factory cleaner. That factory cleaner, I told you, does not manufacture tables, but you need his services. And therefore, we have said, because you need his services, then the wages you pay such a worker is classified as a factory overhead. So we said factory overheads are those expenses, any other expenses found within the factory, but not direct material cost, not direct labor cost, and not direct expenses. Get the point? I defined what were the factory overheads. I told you factory overheads are those expenses found within the factory, but are not a direct material cost, they are not a direct labor cost, and they are not a direct expense. Any other, that's an example of a factory overhead. I gave you an example like factory insurance, factory electricity, factory water. Now I am adding others like indirect materials. I am now adding another one like indirect labor and any other factory overheads. Good. So to get the cost of production, remember we are in the factory. To get that cost of production in the factory, that's what you do. Now, listen again. Normally, the examiner will not give you this amount we are calling cost of raw materials consumed. No. How much you spent on the direct materials or how much you consumed of the direct materials, normally the examiner will not give them to you, that amount. So it is something that you have to calculate. How do you then calculate what we are calling the cost of raw materials consumed? To get the cost of raw materials consumed, we shall be taking what we call the opening stock of raw materials. How much were the raw materials that were there by the beginning of the year? Get the cost of the raw materials that were there by the beginning. We call it opening stock of raw materials. Then you come and add what we call purchases of raw materials, whatever it is. You began with timber, nails, glue, and so on, amounting to this much. Then you bought some more materials like timber, nails, glue, and so on, this much. That is it. Then by the end of the year, not all of them were used. So you less closing stock of raw materials, those which were not consumed or not used, you minus. So that will leave you with the cost of the raw materials that were consumed. Good. So this is what we are calling cost of raw materials consumed. This is what we call cost of raw materials consumed. Now listen. So in other words, I have told you what is the purpose of a manufacturing account. What's the purpose of a manufacturing account? I have told you the purpose of a manufacturing account is to determine the cost of production. How much it costed you to manufacture whatever you're manufacturing. I have already taken you first in an overview how to determine in a statement form how to determine the production cost. Take the cost of raw materials consumed. How do you get that cost of raw materials consumed? I've said you take the opening stock of the materials that were there by the beginning, add the purchases of the raw materials. That gives you the raw materials that were available for use. But not all of them were used, so you minus those closing stock of raw materials, whatever it is. Once you minus, that gives you what we call cost of raw materials consumed. Then you now add the direct labor. Listen, add direct expenses. Once you add those three totals, that will give you what we call what? Prime cost. That will give you prime cost. Once you get the prime cost, we said you now add all the other factory overheads. And whatever you get, that becomes your production cost. Good. So before we put down the format of the manufacturing account, let's put down something on what we have already talked about so far. Let's put down the summary notes on what we have already discussed. So put down the summary, the topic. Put down now the topic. So the topic is manufacturing account. I want us to put down the notes now. Let's put down the notes. So the topic is manufacturing accounts. Then you say this. Under that topic, and another subheading, cost elements in manufacturing. 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 Number one, direct material cost. Number 1, direct material cost. Number 2, direct labor cost. Direct labor cost. Number 3, direct expenses. Direct expenses. Number 4, factory overheads. Factory overheads. Number 5, administration expenses. Administration expenses. Number 6, selling and distribution expenses. Selling and distribution expenses. Selling and distribution expenses. That is it. Now we can write for each of them. So have another subheading. Have another subheading, direct material cost. Have it as a subheading, direct material cost. Direct material cost. Then you say this. These are cost of materials, direct material cost. Then you say this. These are cost of materials. These are cost of materials which are used. These are cost of materials which are used directly in the manufacture of a product. These are cost of materials used. These are cost of materials which are used directly in the manufacture of a product. These are cost of materials which are used directly in the manufacture of a product. i.e., they are materials, i.e., they are materials that can be identified. They are materials that can be identified in the final product. That can be identified in the final product. These are materials that can be identified in the final product. Then you say e.g., in the manufacture of tables, e.g., in the manufacture of tables, direct materials consist of. In the manufacture of tables, direct materials consist of timber, nails, glue, etc. E.g., in the manufacture of tables, direct materials consist of timber, nails, and glue. Timber, nails, glue, etc. So that's all we can say about direct materials. So have another subheading, direct labor cost. Direct labor cost. Direct labor cost. Direct labor cost. Then you say this. These are wages paid. These are wages paid to the workers. These are wages paid to the workers who are directly involved. These are wages paid to the workers who are directly involved in the manufacture of a product. These are wages paid to the workers who are directly involved in the manufacture of a product. In the manufacture of a product. E.g., the wages paid, e.g., the wages paid to those workers who will saw the timber. That means saw. Those wages paid to the workers who will saw, shape, and join. E.g., wages paid to the workers who will or who saw, shape, and join the pieces of timber into tables. E.g., The wages paid to those workers who will saw, shape, and join the pieces of timber into tables. Good. That's all about direct labor. Now we can have another subheading, direct expenses. Direct expenses now as a subheading. Then you see this. Direct expenses, then you say this. These are expenses that must be incurred. These are expenses that must be incurred directly. These are expenses that must be incurred directly in the manufacture. Those expenses that must be incurred directly in the manufacture of a product. 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 E.g., higher charges. E.g., higher charges for hiring a special equipment. E.g., higher charges for hiring a special equipment. E.g., higher charges for hiring a special equipment, and royalties. And royalties paid to the owners. And royalties paid to the owners of patent rights. And royalties paid to the owners of patent rights for using their ownership right. 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 That's all about direct expenses. Have another subheading. Factory overheads. Factory overheads. We want to find out what are they. Already we have discussed them. Factory overheads. Factory overheads. Then you say this. These are any other costs incurred. These are any other costs incurred within the factory. These are any other costs incurred within the factory, but not any other costs incurred within the factory, but not direct material cost, but not direct material cost, direct labor cost, or direct expenses. These are any other costs incurred within the factory, but not direct material cost, direct labor cost, or direct expenses. E.g., factory rents. E.g., factory rent, factory insurance, factory rent, factory insurance, indirect materials, indirect labor, etc. Indirect labor, etc. Indirect labor, etc. Good. Next, another subheading, administration expenses. Administration expenses. Administration expenses. Administration expenses. Then you say this. These are expenses. Administration expenses. And you say this. These are expenses which are of administration in nature. These are expenses which are of administration in nature. These are expenses which are of administration in nature. E.g., office rent, office electricity, office rent, office electricity, depreciation of office equipments, depreciation of office equipments, depreciation of office equipments, comma, salary to the general manager, salary to the general manager and other office workers, salary to the general manager and other office workers, salary to the general manager and other office workers. Good. Next, another subheading, selling and distribution expenses. Selling and distribution expenses. Selling and distribution expenses. Selling and distribution expenses. Then you see this. These are expenses. These are expenses which are incurred. These are expenses which are incurred in the process of selling, comma, promoting. These are expenses incurred in the process of selling, comma, promoting, and distributing the goods manufactured. These are expenses incurred in the process of selling, comma, promoting, and distributing the goods manufactured. And distributing the goods manufactured. E.g., advertising, comma, salesman's salary, comma, depreciation of delivery van, depreciation of delivery van, comma, bad debts, comma, carriage outwards. You know, carriage outwards is our transport paid or cost paid to take goods sold to the customer's premises. So carriage outwards is another example. Good. So I'm now through with the notes about the elements of costs. Have another subheading now. What is that subheading? Final accounts of a manufacturer. Final accounts of a manufacturer. Final accounts of a manufacturer. Number one, manufacturing account. Manufacturing account. Then below that, you say the subtopic is final accounts of a manufacturer. Then you say this, number one, manufacturing account. Then you say this, below that, this is used to determine the cost of production. This is used to determine the cost of production. Number two, income statement. Income statement. This is used to determine the net profit. This is used to determine the net profit of the business. Good. Now, so I want to talk about now, listen, I want to talk about the format of how to prepare manufacturing. Now, I've not discussed it. I've only discussed with you the general format or the general statement of how to determine the cost of production. But I've not discussed with you how to prepare the manufacturing account. But you now know. I told you to get the cost of production, which of course you have to prepare the manufacturing account, get the cost of production. I told you, you take the cost of raw materials, what? Consumed. Take the cost of raw materials consumed. I told you, you add direct what? Direct labor, add direct expenses. I hope you are following. Once you take the cost of raw materials consumed plus direct labor plus direct expense, I told you, you get what we call what? Prime cost. Once you get the prime cost, I told you now add all the other factory overheads. Whatever you get, that's what we call the production cost. So let me take you through now on how to prepare that manufacturing account. So let me first take you through, then you will copy later. So what is the format of the manufacturing account? Listen. So let me go through, then you will copy later. How do we prepare this manufacturing account? Now listen. To get the production cost, I have said you take the opening stock. Opening stock of raw materials. Opening stock of raw materials. Let me put it in full. Raw materials. Whatever it is. Then I told you, you add purchases of raw materials. Add purchases of raw materials, whatever it will give you or whatever you are given, that is what you will get. Then I told you, you less closing stock. You less closing stock of raw materials. Of raw materials. You minus. Once you minus, that will give you what I called what? What I called cost of raw materials consumed. Let me put it that way. Cost of raw materials consumed. Good. So up to there, maybe you can copy that. Then I continue. Copy up to there. So the following up, just come and say manufacturing account. Let's start now together. Manufacturing account. Put down that up to there. Then I continue from there. Manufacturing account. Manufacturing account. Okay. We have said you take the opening stock of raw materials, add purchases of raw materials, less closing stock of raw materials, get what we are calling cost of raw materials consumed. Get what we are calling the cost of raw materials consumed. Okay? Good. I hope you are through, by the way. I hope you are through up to that point. You have taken the opening stock of raw materials, added purchases of raw materials, you have less closing stock of raw materials, you have got what we are calling the cost of raw materials consumed. So finish, I go on. Okay. Once you have got the cost of raw materials consumed, I told you add what? I told you now add direct what? Direct labor, which I called also direct what? Wages. Whatever it is. Continue now. You add direct labor. You add whatever you're given as the cost of the direct labor. Then I told you also add direct what? Direct expenses. Okay. Whatever it is, you add. Listen. Then I told you, after you have taken the cost of raw materials consumed, added direct labor, added direct expenses, you get what we are calling what? You get the totals, and that's what we are calling what? We were calling prime cost. Hope you remember that. We called it prime cost. Good. After you get prime cost, now I told you to come and add what? I told you come and add what? I told you come and add the factory overheads. We gave examples like which one? For the factory overheads, we gave examples like which one? We gave examples like indirect materials. Don't forget. Indirect materials. Whatever it is. I also gave another example like indirect labor. Whatever it is. I gave examples like factory rent. Whatever it is. I gave examples like factory insurance. Put it down. Factory insurance. Whatever it is. Okay. I want to add another one. We shall discuss that later. We shall discuss it later. Cost of what we call cost of loose tools consumed. I'll discuss that later. Cost of loose tools consumed. Cost of loose tools consumed. I'll discuss that later. Cost of loose tools consumed. So let me for now assume, okay, maybe we can add now there, Andika, also add maybe depreciation of factory machines. Depreciation of factory machines. Whatever it is, good. So that's all a few examples. That's just a few examples of the factory overheads. Get the totals, whatever it is. And I want you to listen carefully now. There is something I want to add there. There is something I want to add there. Now listen. Listen now. As a manufacturer, let us assume, listen carefully. As a manufacturer, I want to assume you are manufacturing tables. And by the end of the year, once goods are manufactured, listen, this is your company. Don't write this. Within your company, you normally have your factory. Once goods are manufactured, they are normally transferred them to the showroom. Goods are normally transferred to the showroom for sale. Okay? So listen. So let us assume in your factory, you are manufacturing tables. And by the end of the year, you have some three-legged tables. Three-legged tables, meaning they are not complete. Maybe they should be four-legged tables. But they are processed, or they are at that stage where they are three-legged tables. So we cannot call them, listen, we cannot call those tables raw materials because they are not in timber form. Neither can we call them finished goods so that they go to the showroom. No. So as a manufacturer, you may have some things that are between raw materials and finished goods. They can't go to the showroom. They have to be completed before they go to the showroom. Neither can you classify them as raw materials. when you have such items, I have said, for example, some three-legged tables, which by the end of the year, they have not been finished. We call them, listen now, we call them work in progress. Work in progress. Listen, if from the question you don't have work in progress, if from the question you don't have work in progress, then whatever you are getting down here, that becomes your production cost. But if in your question, the examiner has given you some work in progress, maybe worth 1 million by the end of the year, and maybe by the beginning of the year also, there was some work in progress by the beginning of this year. In other words, you may have what we call the opening stock of work in progress, and you may also have by the end of this year, the closing stock of work in progress. So if you have work in progress, listen, then you don't call this figure cost of production. You now adjust the work in progress. Now you adjust the work in progress. How? You now come and add what we are getting or what the examiner will give you as opening work in progress. Work in progress. You add the opening work in progress, whatever it is. You get the total there, then you less closing work in progress, whatever it is. Then whatever you now get, now that becomes your production cost. Now that becomes your production cost. Good. So copy that last section. So we are saying only if there is some work in progress by the end of the year, if you have some work in progress by the end of the year. Good. So you add the opening work in progress and you less closing work in progress, and you less closing work in progress. Good. So finish. I want to go to the next item now. I want to discuss in simple how to prepare the income statement of a manufacturer. How to prepare an income statement of a manufacturer. How do we prepare an income statement of a manufacturer? That's what I want to talk about now. So let me explain it. Let me explain. Now, we are this company. I'm using the diagram again. Let us assume that from your manufacturing account, you have determined the production cost to be 3 million. Whatever it is that you're manufacturing, it has costed you 3 million. That is the production cost. Now listen. Once goods are manufactured, they are normally transferred. Once goods are manufactured, they are normally transferred to the showroom for sale. They are transferred to the showroom for sale. Now, so it is the responsibility of the factory, listen, to prepare manufacturing account for them to determine the production cost. Now it is the responsibility of the showroom to determine the profit, because they're the ones selling. And so they will be the one to prepare the income statement. And so I want to talk about now, listen, I want to talk about how do they prepare their income statement. How do they prepare their income statement? That's what I want to talk about now. Listen. To prepare the income statement, it's almost the same way like you used to know how to prepare one income statement. Now listen. Of course, you start with the normal sales. Find out how much are the sales of the business. Good. Then you now less the normal cost of sales. This is where I want you to listen now. You minus cost of sales. you minus cost of sales. To get the cost of sales, you start with the opening stock. To get the cost of sales, you normally start with the opening stock. But now listen. The opening stock that we are discussing is not the opening stock of the raw materials. Remember, now we are no longer in the factory, we are in the showroom now. And in the showroom, by the beginning of this year, during the year, there are no raw materials in the showroom. What we have are the finished goods. So we normally start with the opening stock of finished goods, whatever it is. We normally start with the opening stock of finished goods, whatever it is. Listen carefully now. Listen carefully. When you are doing a normal income statement, to get the cost of sales, you normally take the opening stock, you normally add purchases, and you less closing stock to get the cost of sales. Listen. But for a manufacturer, we normally don't come and add purchases here. Why? Listen, because the factory, don't forget, we have just manufactured. And I told you, once they are manufactured, they are transferred where? To the showroom for sale. Okay? They are transferred to the showroom for sale. Now listen. Because now the showroom does not buy the goods from the factory. The showroom receives the goods from the factory. And from our illustration, we saw it costed the factory 3 million shillings to manufacture those goods. Listen. So when the goods are transferred to the showroom, they are transferred at that 3 million. Listen, so to the showroom, it's like they are buying those goods from the factory at 3 million. Listen carefully. It's like they are buying those goods from the factory at 3 million. Meaning, whatever you got as your production cost, that production cost should take the place of purchases in the income statement. We don't have purchases in the income statement. Why? Because I told you the factory does not purchase. No, the showroom, does not purchase. The showroom only receives the goods from the factory. So whatever it costed the factory to manufacture these goods, the showroom is like buying them at that much. The showroom is like buying them at that much. So you take that amount, whatever production cost you got in your manufacturing account, I am saying that should take the place of purchases in the income statement. Good. Then you get what we normally call the goods available for sale. That's normal. Get what we normally call the goods available for sale. Then you now less closing stock again. You now less closing stock of what? Of finished goods. Of finished goods again. Whatever it is, you minus. Then you now get, listen, now you get the production, cost of sales. Push it to the extreme now. Get the normal cost of sales. Good. Listen, once you get the cost of sales, you compare that with the sales, and that will give you the gross profit now. That will now give you the gross profit. So now you can copy up to there, then I continue now. Copy up to there, then I continue. Copy up to there, then I continue. We are looking at the format of the income statement. We are looking at the format of the income statement now. We are looking at the format of the income statement. So copy up to that point. We have said you start with the sales, then you less cost of sales. To get the cost of sales, I've said you start with the opening stock of the opening stock of finished goods. Then I told you, you add production cost, whatever is the production cost. Then you get the goods available for sale. Then you minus closing stock of finished goods. Then you get the cost of sales, push it to the extreme. Then you get the normal GP or gross profit. Then you now let me explain a few other key points. Let me now explain another few key points. Okay, now listen. Once you get the GP, you should, of course, minus the expenses, just like in a normal business. But listen, as far as a manufacturing business is concerned, the expenses, listen, the expenses should be classified. The expenses should be classified according to their function. The expenses that you want to deduct to get the net profit, those expenses should be classified according to their function. In other words, are they performing an administration function, those expenses, or are they performing a selling and distribution function? So once you get the GP, you now come and first subtract all your administration. You minus all your administration expenses, whatever they are. We gave examples like what? Depreciation of office equipment. Whatever it is, we are subtracting. You come and now say here, office rent. Whatever it is, you minus. Here, we come and say office electricity. Whatever it is, you minus. We are looking for all expenses relating to administration. Examples include that. We can also say here, office staff salaries. Office staff salaries, whatever it is, you minus. Listen. So let me hope those are the only ones. Let me hope those are the only ones. Once you get those ones, I am assuming those are the only administration expenses. Now you go to the last category, and that is the last one called selling and distribution expenses. You now list all the other expenses by the name of selling and distribution expenses. Of course, we have identified a few, you remember, like what? Advertising. Whatever it is, you minus. We said bad debts. Bad debts is another example of selling and distribution. You minus. We also gave examples like provision for bad debts. Whatever it is. We gave another example like salesman's salary. Salesman's salary. Whatever it is. We gave an example like depreciation of delivery van. Depreciation of delivery van. Depreciation of delivery van. Whatever it is. Good. Assuming those are the only expenses relating to selling and distribution, now get the net of all of them. Get the net of all of them. That means from the GP minus all these expenses, get what we call the net profit now. Get what we call the net profit. Get what we call the net profit. Okay? That's what we are saying. I hope you can now copy the rest of the part now. From the GP, we have to minus admin, so copy that section. You have to minus the admin expenses. We are giving examples like depreciation of office equipment, office rent, office electricity, office staff salaries. Once you quote those ones, you now come to selling and distribution expenses. Selling and distribution expenses now. We are giving examples like which one? Advertising, bad debts, provision for bad debts, salesman's expenses, salesman's salary. I go on, depreciation of delivery van. Then I'm assuming those are the only ones. Get the net, and that net to balance becomes the net profit. Becomes the net profit. Good. So finish. We continue from there now. Finish. We now continue from there. Finish. I go and mention two other small things before we now do an example. So finish. So finish. I mention one or two other things. So finish. I do one or two other things. Okay. Now listen. When we were looking at the format of a manufacturing account, I told you one example of a factory overhead. Listen, one example of a factory overhead I told you is this cost of loose tools consumed. Cost of loose tools consumed. And that's what I want to talk about now. What are they? And how do you calculate it? We have just said cost of loose tools consumed is an example of a factory overhead. So what are they? Listen, as a manufacturer, you may need some small tools in whatever you are manufacturing. Small tools in whatever you are manufacturing. Maybe there are screws, bolts, nuts, and so on. Whatever they are, small tools. Let us assume that by the beginning of the year, you began the year with small tools worth 5,000 shillings. Then during the year, maybe you bought some more amounting to 10,000 shillings. Small tools that you need. That means, listen carefully, that means that by the end of the year, you should be remaining with small tools worth amounting to 15,000. But the question is, suppose by the end of the year, you value the small tools remaining, and you find they are worth 12,000. The small tools that are remaining are worth 12,000. So it means if I remove the 12,000, I began the year with small tools worth 5. I bought some more worth 10,000. So by the end of the year, I should be remaining with small tools worth 15,000. But what if I value them, those which are remaining by the end of the year, and I find they are only worth 12,000? What does it mean? It means, therefore, that small tools worth 3,000, small tools worth 3,000 have been consumed during the year, That means they have either broken down or whatever, they have got lost. That means they have been consumed during the year. So that's how much you will take. Listen, 3,000 is the much you will take to your manufacturing account. So when you have small tools in the manufacture of whatever you're manufacturing them, we call them loose tools. When you have loose tools, you get the cost of the loose tools consumed. How? By taking the opening stock of loose tools, you add purchases of loose tools, and you minus closing stock of loose tools, and you minus closing stock of loose tools. So let's have it as a subheading now. Let's have it as a subheading, andika treatment as a subheading, treatment of loose tools. Treatment of loose tools. Treatment of loose tools. Put it down as a subheading, treatment of loose tools. Then you say this. You say this. The cost of loose tools consumed during the year, the cost of loose tools consumed during the year is considered, the cost of loose tools consumed during the year is considered as a factory overhead. The cost of loose tools consumed during the year is considered as a factory overhead. In the manufacturing account, in the manufacturing account, in the manufacturing account, and it is determined as follows. And it is determined as follows. So you come and say opening stock of loose tools, opening stock of loose tools, whatever it is, you add purchases of loose tools, whatever it is, then you less closing stock of loose tools. You less closing stock of loose tools, whatever it is. Then I told you now, whatever you're getting there now becomes cost of loose tools consumed. Cost of loose tools consumed. Good. So put down that. You take the opening stock of loose tools, add purchases of loose tools, less closing stock of loose tools, then you get the cost of loose tools consumed. That's what I told you, or I've said. You take it to the manufacturing account as one of the factory overheads. As one of the factory overheads. Good. Okay. So maybe what we can do next time, maybe for today we can stop there. What we can do next time, I will do an example. I'll now do an example on what we have said so far. I'll now do an example on what we have discussed this far. Okay. So maybe for today we can stop there. We pick it up from there next time. We pick it up from there next time. Otherwise, have a good day. See you next time. Bye.